Since the beginning of the year, we've seen significant volatility in the markets, and it's having a big impact on people's portfolios. I want to show you what a real portfolio looks like. I'm going to go over mine. I'm going to show you all the investments, tell you what I think, and tell you what I'm going to be doing. Even today, Donald Trump has come out and called Jerome Powell a major loser or something like that. It's a bit of a lunatic. But that creates continued uncertainty and volatility in the markets. And that's what we've seen, right? The S&P 500 is down nearly 20% since the beginning of the year, the old world at a similar place. And if you're at pension age, that is very concerning. If you're a short-term investor, that is very concerning. Also, if you're just new to investing, and this is the first time you've gone through anything like this, it's very concerning. So let's go through it and tell you what I'm going to do. So I've got £103,912 in here as of right now. I did max out at the beginning of the year at £117,000. So technically I'm down by £14,000, but I've also deposited £4,500 since the beginning of the year. So I'm down by nearly £20,000 on paper. When you look at the max view, I am still up 17%, so it's always important to zoom out. So over the 3 months, the portfolio is down 14.4%. That is a lot. That means I've lost on paper £17,000, like I said, it says it right here. So we'll go through the holdings, biggest to smallest, because that's the way that they order it now in trading 2 and 2. And my biggest is the FTSE All World. That is ticker FTWG. That is the dividend paying version. And I hold that just because I like getting the dividends. On a quarterly basis, I'll get a dividend from this. And next month or soon, it's due anyway. Maybe the month after, I can't remember. I use Stock Events, by the way. It's a great app for tracking when your dividends get paid. It can be hard to work it out. So it's a free app. I'm not affiliated in any way, but it's what I use. It tells me when I'm going to get my dividends. That will pay me a couple of £100 in the next few days, and I will weeks, and I'll reinvest that directly back into that. So I'm down 4.17% according to this, of course, but I changed my whole world. Around May time last year, if I can find it, is around about March, April time last year, I moved out of the Vanguard version and I moved into this, basically just because the fees are lower. So I'm quite happy with this and I'll continue to hold it. But when we look at it, it's down 1.82% on the year, down nearly 15% since the beginning of the year. So we've seen some pretty significant drops in the market. Vanguard S&P 500, that, as I said, is down 20% over the last 3 months. In a year, it's down 3.2221%. And on the max, important to zoom out, we're up 200%. I got £29,000 in here. I'm up 4.5%. I am up more than that again because I changed my S&P 500. Too much tinkering. This pays on a quarterly basis. The dividend, you can see all the individual businesses that are in here. It shows all of that sort of detail. And I've got £29,000 in here, and I'm much more aggressively going into the all world. Now, people do ask quite a lot, why do you hold an all world and the S&P 500? Well, quite simply, because yes, the US has been significant growth over the last few decades. It now represents 65% of the all world. Naturally, there's duplication then. But what holding an all world does is it gives me an insurance policy, because I don't know who's going to be the superpower going forward. No one does. It used to be Japan. Could be China next. Could be UK. Sorry, I don't mean to laugh. But who knows what the future might hold. So by holding the all world, I get exposure across both, which I'm more than comfortable with. But I also do still think that we will see some growth in the S&P 500. So that's the punt that I take. Of course, you do your own research and do what's right for you. The next one I have is the Vanguard FTSE Emerging Markets. Now, I do have too much duplication here. I'm down 1.34% because my Invesco All World does also have an allocation into emerging markets. So I will at some point come out of that and just move the money into my all world just to keep it more simple. It hasn't been affected anywhere near as badly as the all world or the S&P 500. The emerging markets are only down by 7.6% in the last 3 months versus 20% in the S&P 500. It's a quarterly dividend paying business again, and the ticker for this is VFEM because it's a dividend paying version. The next one I've got is Realty Income, which of course is a monthly paying dividend. That is a REIT, Real Estate Investment Trust. They basically buy properties and then they take rent, and then they give 90% of that rent out as dividends. Now, it gives me diversification across property. It has probably underperformed. Look at the max, it's up 22%. But you can see it's all over the shop. It's up, down, it's all over the place. And I probably have underperformed by putting that money into here versus putting it into an old world. But I like that monthly dividend. It motivates me. Keep going on about it. So the dividend rate on that at the moment is 5.46%. And every dividend I get on that as well gets reinvested straight back into it. So in time, I have a high level of confidence that it will grow, that it will snowball, that it will be okay in the long run. The next one then we have is Legal & General, which is a UK darling, of course, because of the dividend that it pays, which is 8.25%. But look at that. Over the last 3 months, it's up by 7.6%. Over the last year, it's up by 2.29%. UK financial institutions have done okay since the beginning of the year. They're nowhere near been affected as much as the US, as the rest of the world. And with that really tasty dividend coming in, I like this one. I'm going to get £200 in the next few weeks in this one, and that will get reinvested back in and it will continue the snowball. Legal & General then, we got Unilever, which is a UK business. It's UK based, but it is a multinational business of products all over the world. Looking at that over the year, it's up 28%. Done okay. Over 3 months, it's up 8.24%, and that puts me in a position where I'm nearly 22% up. The dividend on that is 3.02%, and that pays like a US business does on a quarterly basis. Some UK businesses pay biannually, twice a year. This one pays on a quarterly basis. Next one we got then is Microsoft, which up until recently typically has done between 30 and 40% gains per year. It has absolutely flown. But in the last 3 months, it's down 16%. US tech business, what you expect. Down 10% over the course of the year. Look at the max house, 740% up. We can see the two drops there, COVID and what's going on at the moment. I will continue to hold this, and I've actually dripped into it recently, so I'm more than comfortable with it. Next one then, we've got Lloyd's, which is absolutely flying for me at the moment. I'm up 52% on the 3 months. It's up 23.7%. On the year, it's up 40%. We don't normally see those sort of gains within UK big financial institutions, but because of what's been going on, they've done really well. The dividend pays, that's not quite right, 0.04%. That's not what I think, it's around 3%. Something's not quite right there. And I've got £2,400 in here, and I'm planning on holding that for a very long time. Aviva is another financial institution in the UK, more insurance-based and pensions, and that has done really well too. So over 3 months, up 8.85%. On the year, up 16.42%. We look at the max, it's kind of all over the place again. So you have to be very careful when you're buying these sort of businesses. If you'd have bought it at the peak, where was it, 2022, you'd still be down by now. This pays a tasty dividend as well. It's coming in at 6.68%, and that's going to be coming to me in the next few weeks. We've got Apple, which has seen significant uncertainty because of the tariffs and because of where it's going to get manufactured, what it's going to cost to import it, the fact that it's made in China at the moment. It is being used as a tool in what's going on. And that has created a 15% decline. Over the last month, it's down 11%. But let's zoom out, nearly 600% up. It pays a very small dividend, which is nice to have. I reinvest that as well, but that's a pretty tasty looking graph. There is uncertainty with this and there is risk associated with it, but it's one that I'm comfortable to take. Alphabet, another one that has just been smashed to pieces, 3.46% down on the year, 3 months down 24%, so bigger than some of the other ones even. And that pays a tiny dividend coming in at 0.54%. I have got 23% up in total, and I'm up, and I've got £1,683 in there. So it represents nearly 1.5% of my total portfolio, so it's not a significant amount. Johnson & Johnson has done terrible for me. On 3 months, it's actually up 7%, but that's because consumer goods. So people, like I say, move to consumer goods. They continue to buy stuff. Doesn't matter what's going on in the world. You still need your shampoo, less so me nowadays. 6.39% up on the year, and a bit all over the place because it's one of these massive businesses in the US. There's not that potential for significant growth. So up 60%, 68% still since 2019, so it's pretty bloody good. I've got £1,600 in here, and as I say, down by 9%. PepsiCo's done really bad for me. I'm 19% down. I bought it at the wrong time, but it's done okay versus the S&P 500 over the last 3 months. Down by 4% rather than 20, so that's beating the market, I suppose. The dividend yield on that is 3.82%. The PE ratio is at 20, so could represent good value at the moment if you're interested in that. There is also the impact I haven't mentioned before of FX, foreign exchange, which is costing me £100 on this investment. Tesla, I have got £1,356. Now that has had a tough time because of who's in charge. 46% down on 3 months, but still 56% up on the year. That's because it absolutely flew when Trump came in. But now we're seeing what we're seeing, and there's a lot of people very unhappy with that brand at the moment because of who's in charge at the top. It is absolutely falling through the floor. I actually am up. That's actually a 7-bagger for me, believe it or not, because I bought it originally in Hargreaves Lansdown in June 2020. I bought it for 200 quid, so it's a £200 investment. It's gone up to nearly £1,400. It's a 7-bagger. When it reached around 1,100 quid, I sold out because it was in a general invest account in Hargreaves Lansdown. I wanted to make sure that I was protecting against any of the gains from a tax perspective. So I transferred that cash into Trading 2 and 2, and I bought it. So I'm a 7-bagger I'm comfortable with it at the moment. By the way, if you haven't already opened an account on Trading 2 and 2, there's a link in my bio. If you use that, deposit £1, you get a free fractional share as a result of doing so. You can also use promo code NEIL, N-E-I-L, and you'll get a free fractional share as a result of doing so again. Virgin Galactic, the last one, then down 91.74%. You can see I've only got 11 quid in there. That is down 85.4% 2% on the year. Look at the max, down 98.96. So Branson and his buddies sold out here when it was $1,100. It's $2.48 now. A lot of dodgy stuff going on behind the scenes. I thought there may be a bit of an increase with the Blue Origin, Katy Perry business, but it's not been the case. It is going to go to zero, I think, but I've only got 11 quid in there, so I'm comfortable. So on the day, we can see the whole world is down, the S&P 500 is down, but there's a lot of green on the right-hand side, but I don't necessarily worry on a day-by-day basis because I'm going to hold this stuff for decades, so I'm comfortable with it. If you've got any questions or builds on my portfolio here, please let me know. Thanks for watching. If you haven't already given a like, give it a like. Subscribe to the channel. I don't normally ask that. It's a bit cringy in it, but I'm going to be giving this a go now going forward. I've got a life update coming next week, hopefully, to explain why and what's going on. But I appreciate your support. Thanks for watching. Have a good day.